Hey, what's up everybody? It's your mortgage expert, Brian McCauley here. So are you a buyer in Dallas, Texas, but you've got multiple jobs and multiple streams of income, and you're trying to figure out, can I use all that income to buy a house? Will it help me? Will it hurt me? Stick around. In this video, I'm going to teach you everything you need to know. So listen, we're getting a lot of buyers out there right now that are still eager and urgently buying houses, even though interest rates aren't ideal and they haven't come down as much as we would like. They should trend down by the end of the year, but that being said, Dallas is really popular. But one of the biggest trends that we're seeing right now are buyers that have multiple sources of income, but more importantly, multiple jobs. They've got a full-time job, they've got a part-time job, they've got a contracting job, a seasonal job, and yes, they make the income, and yes, they work on both the jobs, and maybe they've got multiple employers, but mortgage guidelines are a little bit weird when it comes to things like this. So what I want to do in this video, and I'll unpack what can and can't be used. Now, when it comes to specifics on full-time work, part-time work, the guidelines are pretty similar, whether you're getting a conventional loan or an FHA loan or a VA loan, but there's a little bit of flexibility and discretion on that, so don't take this as gospel all the way through for every loan guideline, but it's pretty much the same footprint regardless of what you're getting. So here's the short and the easy part on a full-time and a part-time job for the first tip, okay? So tip number one is if you are a full-time employee and you have a part-time job, which is like a W-2 or hourly job, a lender will only let you use the full-time earning and the part-time earning as income when you've done both the full and the part-time job for 2 consecutive years. So this happens a lot where people have a secondary job and they've been working there for a year, year and a half, and they've got good income, and that income either helps them qualify, or maybe they qualify without it, but that extra income gets an extra $50,000 or $100,000 in buying power. So when you have part-time work and full-time work, the takeaway is you must have worked those together for a minimum of 2 years, and you still have to be employed on those 2 jobs. So you can't like work at your full-time job and then work at Chipotle part-time, and then you work there for 2 years and you drop Chipotle and you're no longer working there. We can't give you that income. It has to be consecutive. It has to be binary, both full-time and part-time together, and it's got to be a minimum of 2 years. The other thing I want to talk about around full-time work and part-time work is when someone's additional part-time work is their self-employed work. So this is a different category. So people think, well, that's weird. If I've got 2 full-time jobs that are like W-2s that are separate employers and I work for both of them, you guys need 2 years together. Yes. But how about if Brian McCauley owns his own company, let's just say a lawn mowing company, and I work full-time somewhere 40 hours a week as a W-2 wage earner or a salaried wage earner. But let's say I've been self-employed for a couple years, and let's say last year's tax returns as a landscaper, made $50,000 bucks. Well, the guidelines change on that. So when you're self-employed and it's part-time work, it's not considered part-time work. It's self-employed part-time work, but we consider it secondary income. So whenever your secondary income is self-employed income, you can use it or you cannot use it. Now, this is a funny thing because people say, well, why would you and why wouldn't you want to? Well, let's say in theory, that secondary income that I have as a self-employed business owner didn't do well last year. And let's say for some reason I took a $30,000 loss on my tax returns because I had way more expenses than I had income. Well, if I had to use it, that might take away from my regular W-2 wage earning job and pull my overall income down. But here's the cool thing about this guideline. This guideline states that because it's secondary income and you're the business owner, if you don't need to use it, you don't have to. If you need to, you can. So let's say there was $30,000 of positive income. I could take that income with my full-time income, add them together, and that may give me more buying power. And you don't need 2 full consecutive years of working both incomes together. Now you have to have 2 years employment history as a self-employed person, but you don't need 2 years of the full income. You may be able to use your just standard wage, your standard earning, and maybe 1 year, the most recent tax return. So it does favor the self-employed person when it comes to secondary or additional part-time income when you're a self-employed person and your tax returns show positive. When you're not the business owner and you're working 2 separate jobs, a full-time and a part-time, you must work those 2 together, and they must still be consistent, and you still must be on both jobs. Now, can you work 3 employers? Can you work 4 employers? Can you work 2 part-time jobs? There's a lot of variables on this. You can actually work for as many employers as you want to, full-time and or part-time together. I've actually seen up to 4 people or 4 employers with one person. But the biggest component and takeaway on the mortgage guidelines is you have to show the ability and the history of 2 years to be able to do all that together. So whether it's a full-time employer and a part-time employer, whether it's part-time, 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 whether it's full-time, part-time, part-time, you can add all those up together, but it's 2 years, guys. 2 years is the takeaway on this. So if you're out there looking for a house, if you've got multiple employers that you work for, contract, remote, all these things, you can use some of this income, but you got to know exactly how much can and can't be used, and it's all determined on how long you've been at all of them together, the type of earning, are you the earner, are you the employer, all these things matter. So it can get confusing, but I'm trying to drive some clarity that some of it can be used, some of it can't be used, but don't keep your fingers crossed. Don't take it for granted that just because you make the income that we can use it. Definitely get with us up front so we can take a look at everything, talk to you about your financials, tell you what can and can't be used so there's no confusion, and eliminates all the risk, and you fully understand the roadmap when you go out to the market and do the fun thing, which is start to shop for a house. So listen, if you found this video helpful, do me a favor, like, comment, subscribe, even share it with somebody that you might know that could benefit from this video. And if you or anybody you know just wants to have a conversation about your financial future, the housing market, or even to get a pre-approval, do us a favor, call us, email us, text us. We're always here for you. Until next time, stay tuned.